All right, guys, big news just hit markets over the weekend. You guys probably already know what it is. Iran just launched drones over into Saudi Arabia, their largest oil fields. Let's talk about how this is already affecting our markets and see what potential plays we have for the week. All right, fundamentals are key. Let's keep an eye on markets. Let's take a look. All right, traders, what's up, guys? Welcome back to another Forex fundamental analysis video. My name is Kleveland head trader here with the top traders, and I am extremely excited to be talking to you guys today about what fundamentally is going down. All right, so if you guys are new to the channel, what's up? Happy to have you guys here on the Top Trader channel. We like to go over everything happening in the macro space, okay, the global economy, whether it's political, whether it's war, all right, anything that's going on, we want to let you guys know about it because we know it has a 100% correlation with where these currency prices and all these assets are going, okay? So if you guys enjoy the content, make sure you guys subscribe. If you like the video for your boy. I very much appreciate it. Okay, so here, I want you guys to see this real quick. Here's a screenshot. Wanted to show just a news release based off of what happened earlier this weekend. Iran launched 10 drones into the largest oil field in Saudi Arabia, all right? Basically cut off 50% of their overall production, which accounted for 10%, okay, of the entire global production. All right, this is probably one of the more intricate, strange, insane positions that I have ever seen, I guess, these markets or these, Middle Eastern countries ever be in. This is some pretty pressing stuff. It's the #1 trending thing right now, even in financial Twitter, because of course it's affecting markets in a very, very huge capacity. Here I have oil pulled up at the moment, and as I show you these assets, you will see some massive amounts of volatility. Take a look at oil prices here. We have just pushed back up to a previous high, which we haven't been at since around May 20th to be specific, and obviously it's because the tighter the oil market based off of supply, okay, if 10% of the demand is cut, then what are you gonna get? You're gonna get a price increase, supply, demand. Supply has now decreased, you're gonna get an increase over here in demand, right? So if we take a look real quick at the weekly and kind of see where that is relatively to maybe where we've been all year, maybe 2018. And so you can see we did make a high of 76, all right, here on the light sweet crude futures. And right now we're sitting at the 62.60s. Okay, so not some type of dramatic move, but in relation to the overall structure here. But guys, this is a very, very huge move. So from the high to the low there, you guys can see at one point we were nearing that 23.6. We broke out the 23.6, traded all the way back up to the 61.8% fib. Okay, we have a fib video coming out this week, by the way, so make sure you guys tune in on that one. I'm excited to push that one out. A lot of folks are still trying to learn how to trade Fibonacci's. We hung around that 61.8 for a second, traded back down to the 23.6, and then we were consolidating, and then we're just basically ranging now, right? We were just breaking outside, though, of this huge 6, 7, 8 week range down here in the 50s, and now we're here in the 60s, and now it's basically, okay, it's a waiting game. All right, is this momentum going to sustain? I'm about to talk to you guys in a little bit about volatility. This is going to be very important for you guys to understand here, so make sure you watch to the end. But is this momentum going to sustain here, or is this going to be a lot of volatility? So how is this affecting our actual currencies? Let's take a look real quick. I want to show you guys what we're looking like on our currency indexes. Automatically, you're getting a run here on the JPY, gap up on the JPY, more risk. What do you get? JPY pushing to the upside. Very interesting stuff. Okay, again, as these things unfold, guys, here's all we're trying to rationalize. All we're trying to really figure out is this the beginning, right, of a potential larger scenario, larger, bigger event than we could have anticipated? Because if that is the case, then yes, we're going to start changing the direction of these past, 2-week trends or so. This JPY has been selling off for the past 2 weeks, maybe 3 weeks. Is this going to be a change in the trend? It's going to be a change in risk, all right, but how long is it going to sustain? The bombs have been dropped. That is the thing that I'm basically, what's keeping me on the side of we might get a true directional change. Usually when Trump tweets out something, it's, frivolous, all right? It's a tweet, it goes away, and then people forget about it. Folks, the bombs have been dropped, okay? This is a little bit more serious. I don't think this is something that you kind of just say, okay, yeah, the bombs have been dropped. Now Trump is talking about, here's a quick tweet where he was mentioning something along the lines of fear and how he basically is saying, hey, he's locked and loaded to start a war with Iran. I think those are his actual words, all right? So if we get an actual momentous change here, because these are events that may actually, again, sustain in markets. We may see this JPY here start to turn over a bit. Now, again, yes, I would have enjoyed to see this JPY sell off a little bit more back down into this particular structure here, but hey, when things pop up, you have to adjust a bit, right? And so if I head over and show you guys real quick what we're looking like on the weekly time frame, and then we zoom in a bit here, again, you can see the past 2 weeks, massive sell side. 3 weeks ago, we started to get a little bit of consolidation and a little slowdown, and you can basically say that we're at the top of that previous consolidation where we see markets currently. Okay, so that's where we're at with the JPY. That's one that I want to specifically go over. Now, we're about to start heading over into some pairs that I'm actually looking at for this week in particular. JPY, again, yes, it's a risk styles position. Like here, if I go over to the CHF is another scenario. This is a weekly. CHF is another scenario where, again, if more risk come into markets, you'll see it push to the upside, but we're not getting the effects here that we otherwise would be getting if we were looking at that JPY, right? And so wanted to also show you guys what we're looking like on the dollar, because again, during heightened times of risk, sometimes you can see some strength come into the dollar. And this is specifically what I did like to see here was this consolidation. Okay, we understand that markets are extremely dynamic, right? And so what that means is it's very rare for them to maintain a certain area of consolidation for a long time. So in that sense, we may see a little bit more reverberation, potentially to the upside, of course, potentially to the downside. But I always like the idea of seeing a very well-defined structure, because I know eventually the thing's going to get broken. Now we just have to start rationalizing, is it going to be broken to our favor? I think here is a decent opportunity to catch some dollar longs to the upside based off of, again, some of the things that we're seeing happening over the past 10, 15 trading days or so. Now, where do we play that? Moving over a bit, I wanted to talk to you guys about the Aussie USD. Aussie USD might be a pretty decent opportunity, all right, to play these moves. Now here, real quick, here's the Aussie. Wanted to show you guys how the Aussie is sitting up here in these highs. Okay, same thing, massive move to the upside. Here's the Aussie USD. Okay, so AUD. USD, we pull that bad boy up, and then you guys start to see what I'm looking at here, which is a potentially overextended market. And so this might give us an opportunity to catch some sell side breaks back down into some type of structure. Even if it's just a short-term opportunity, it's about attacking here and hoping to see that momentum unfold, and then boom, 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 we might get some action. Okay, so that's the pair I'm going to leave you guys with. If you guys want to get a little bit more granular and see a little bit more exactly what we're looking at, all right, when in regards to the directional bias that we have for these particular currencies, I would head over into that academy. All right, the link's in the description. There's a lot of success happening right now coming out of the academy. I want to mention one of the top traders of the week that we had for last week, which was Tien. We're going to be doing a nice breakdown with Tien and exactly what he got in on in the trading opportunity that he took. I have a screenshot of that right here. It was basically a consolidated move, break to the upside. It's a very, very sophisticated kind of trade. I want to get some more details on how exactly he executed it, but that's going to also be an interview that we're going to do inside of the academy. So the link's in the bio if you guys want to hop on in. All right, so yes, the Aussie USD, it's a decent looking opportunity. I want to know what you guys think about this particular trade as well. It looks pretty good. All right, now the one thing I want you guys to be careful with, okay, is volatility, and that's what I wanted to talk to you guys about before we closed out. All right, because a lot of times folks, they factor in a lot of things when it comes to trading. They'll factor in where they get in, they'll factor in where they get out at a profit, and you know, on occasion they'll factor in where they get out if they need to pull their stops. But on occasion, all right, I would say 90% of the time, the new traders that we're communicating with, they don't, or they very, very rarely factor in what's happening from a volatility perspective. Okay, the more you understand volatility, man, the more you're not going to get faked out as to what's going to be happening in the actual market itself. Okay, so let's say, for example, here I'll pull over some random position. Let's look at the Euro GBP real quick. And if I take a look here at the Euro GBP, what you guys see, you see a massive amount of sell side, but markets weren't simply just selling off in a nice, easy way. You see these spikes to the upside. A lot of times that can whip people out of the market. Okay, we actually had a trade last week that we played, which was the NZD CHF, where it was an amazing position. We had a lot of people make money to the upside, but we also had some folks get whipped out of that position, okay, because of the volatility. They weren't setting their stops and they weren't managing their trade in a way that gave the market room to breathe. Okay, so the first thing I'd like to say in regards to just a quick tip, if you guys are trying to assess volatility on a higher perspective and not get faked out of positions or get stopped out and then have the market flow in your direction, is trying to rationalize what's happening with the average true range. Okay, so we call it the ATR, but the average true range gives you an idea of how much a currency moves from the up to the upside and to the downside on any given day. And the better you can understand volatility, the better you'll be able to position your stops. And again, the better you'll be able to position your entries and your targets as well. All right, it's one of the first things that we teach inside of the academy. And for you guys, again, I wanted to give that to you because I don't want to hear too many more folks getting pulled out of positions where you should have made the money. You're not taking into account all the massive amount. Like, look at what just happened to the oil market. Okay, if your stops were in any capacity too tight, then definitely you would have got pulled out. All right, and even when we were seeing volatility on the euro, again, we were getting so much euro sell side, which allowed for that euro USD to potentially correct a little bit. But if you were again too tight on your stops, you weren't going to get any kind of real size in on that move. All right, so be careful with volatility. Take into account how much does the market move a bit. I know at Thinkorswim they give you an average trading range indicator. Maybe you guys can find an average trading range indicator on MetaTrader 4 and on TOS, but TradingView. Okay, I know there are millions of them, so they have to be there as well. Okay, so let me know what you guys think. Take that tip on volatility seriously. I think that'll help you out a lot. Let's see what happens with the Aussie USD as well. And guys, trade safe. Okay, I hope this trade war stuff and all the things happening in regards to just war in general doesn't get too insane to where we won't be able to play in markets the way we want to. Okay, because markets can definitely start to get very, very tumultuous. All right, be safe in your trading. Make sure you use stops, and I'll talk to you guys later on this week.